Yeah, I'm losing my edge.
Today, we're talking about whether or not stocks are worth their weight in gold. And so, this is probably one of the longer titles that I've come up with, but trying to hit on the fact that we've got a very expensive, relatively, I mean, whether or not it's expensive, the market will dictate in the future, but a relatively expensive gold market and precious metals market in general, given recent years of trading. We've got a relatively expensive stock market, as we'll see, especially some of the indices at all-time highs, most of the indices within a couple percentage points of those all-time highs. And so the question becomes, is it sustainable for these two markets to be so relatively expensive for long periods of time? Because, Pete, before we get into some numbers and some more information around stocks and precious metals, can you give us the traditional macroeconomic viewpoint of these two asset classes in terms of risk on and risk off markets?
Right. Well, you know what? There's two sides to that coin, and I think this is the trap when you're trading metals and trying to assign behavior to them. The classic, and I think you've done a lot of great research talking about is gold, that risk on, risk off piece, and it's relatively random at best. So, I mean, the conventional theory is, when things are good in the economy and there's a chance of inflation, I don't know why anybody would be thinking that right now. They're buying gold because it's a store of value. When equities go down, the other argument is a flight to quality. We
Sure.
know that I don't think while everybody talks about flight to quality things, I think all of your research has said it really doesn't exist. Anything that happens to look like that is more just fancy than actual fact.
Sure.
So that is the two sides of the coin. And then you can look at the other case. If there is no inflation, gold's a non-interest bearing asset. It's less attractive in a world with zero rates.
Sure.
In a rising stock market. So taking those four basically kind of macroeconomic backstories, it's like pick them.
Yeah, no, there's a lot of contradiction in that, especially right now, given the stock market at all-time highs with very little inflation. So it's like, okay, which way is gold supposed to go? But we have seen a lot of instances in the past where this relationship has borne out. And we're going to get to correlations and number crunching in a little bit here. But there are plenty of instances where you see that stock market selling and you see that gold buying. And right now, while Pete and I, if gold and stocks, Pete, were in, the middle 70 to 80% of their range, we wouldn't be having this conversation because you and I would not be trying to engineer any kind of story around stocks and gold and trading them off of each other. That being said, we've got them both at highs for the last, we'll get into which stock markets are at all-time highs in a second, but you've got precious metals in general, the small precious metals index, Pete, at highs since we have data for the index going back to 2016, all-time highs there. I know gold, I'm pretty sure gold is a high going back at least decades here, above 1800. And this is, the 11th all-time high of 2020 for the small precious metals. Truly an interesting time to be launching this product, to see all of this. It launches June 1, and you see 1, 2, and now 3 new highs in this product just in the first 25, 26 trading sessions for the product itself. But what's been nice here, relative to gold, Pete, is the ability of this precious metals index from the small exchange to come off of those highs. And that's why we've loved, while NASDAQ, that stock index, is at all-time highs and gold and precious metals here are at highs themselves. It's been those two different stories where this precious metals index, new high, coming off of that high. Doesn't make a new high until mid-May here. New high comes off of it, another one comes off, and you see this elasticity, like you like to say, around that, which isn't the case for gold. And we've talked about this a little bit in the past. Is SPRE reverses off those highs better than gold, right?
Yeah, absolutely. And it's the again, it's just the selection. You want exposure to specific things, but you want to remove selection anxiety or selection, whatever we call it.
I like
Selection.
selection anxiety. That was a pretty cool term.
Well, because it is. It's sometimes and it destroys mechanics because you're like, geez, I didn't pick the right one. So do I stick with the trades that's not doing what I thought it did, or do I move to the other one? It just creates a challenge. So I think in this case, adding those components are the right mix of adding, not just keeping one piece, but adding, you look at some of the mining ETFs and the gold ETFs, and do they have exposure to gold? Yes, but a lot of other things too. The cost of fuel for mining, everything else that comes with it. So there's the combination of all those things make for a tougher exposure trade. Here, I think you're getting the benefit of precious metals exposure, but you're also getting a little bit more back and forth, which we want as traders. I want a market that gives me some back and forth, not only to if I've got a bias, either long or short, I've got some room to get in and get out. Also, if I have a more longer term opinion, I get some elasticity back and forth to get a better average price or a better location for a little bit more strategic longer term trade.
Yeah, it is nice to see the opportunity of this precious metals product on its own. But then, yeah, I wanted to bring in a little bit of this expensive stocks piece because, you see weirdly this stock market moving higher with gold and precious metals in general making those highs as well, given that macroeconomic viewpoint that a lot of people like to quote, where you'd think that it's got this harsh negative correlation. But we saw this in March, where these markets made new highs together and then also came off of those highs together. But what's a little bit frustrating is that you saw some of this back and forth between the two products here, as gold is making new highs and bouncing around, and then you see a little bit of that divergence here as the stock market here from the small exchange makes those new highs and then comes off a little bit. When you add in this piece here in blue, looking at the micro NASDAQ, it's a little bit troubling to see that you've got the NASDAQ stock index making all-time highs, clearing all-time highs by a long shot here, with precious metals also at those all-time highs. I mean, is there anything to make of the fact that both of these markets, Pete, are sitting at those most expensive values that they've ever seen? Is there anything to put together? Are you interested in those extremes kind of independently?
I don't think I think this happens it aligns very well. I think if you went back, it would be hard to make that case, that they're both, I mean, we could state the obvious, they're both rich. But I don't assign that, NASDAQ is driving gold or vice versa.
Sure.
I think this happens to be particular to the circumstance we're in right now.
No, and that's a good point there. I like that you use that terminology, that metals aren't driving stocks and stocks aren't driving metals. Because when you boil it down to that, it actually makes that near zero correlation make a lot more sense. When you think about stocks and bonds, or different sectors of the stock market, or different exchange rates of areas that are very akin to each other, and you can kind of think, or even exchange rates that are tied to commodities because that country depends on a certain commodity. That is a relationship oftentimes where you could say to yourself, okay, what is driving what? And when you build that kind of relationship, that's where a full pairs trade idea kind of comes from.
Right.
But when you look at stocks and gold, or stocks and gold, silver, and platinum, it's nearly impossible for me to make a story that gold is expensive because stocks are so expensive, or if gold is being driven higher by a weaker dollar, what does that have to do with stock? Like it's like all of these, and I appreciate you trying to make that story on the front end of this segment, because once you try to get even one kind of degree deeper into the relationship, it starts to fall apart. And, especially when
Right.
you look at crunching some numbers here, which we have, looking at rolling correlation, you see this negative correlation, kind of what people in their heads want to believe is going on between precious metals and a stock index like the NASDAQ. But then, Pete, I mean, it's almost a 50-50 split between a lot of negative correlation and a lot of positive correlation, balancing out to about zero correlation between the two products.
Right. Yeah. And that is, I think that's the takeaway here is that when we see, and we've talked about this before, when we see correlations cross like this, this isn't a particularly long period of time. Trying to force trade is very difficult. And, I'm glad you put the caveat about what I talked about earlier, because that was a cautionary tale. It wasn't an explanation of what you should be looking for, because it took me 5 minutes to go through 4 scenarios that had absolutely no value in terms of a tradable idea. So
Sure.
Be mindful that, backstory is interesting, but really kind of irrelevant and sometimes toxic in terms of making productive decisions. But this is, I think, this volatile relationship is challenging. I'm not a big fan of trading correlation reversion. I like to see more stable correlations, which means the price divergences aren't as great, and I accept that. So you can't have both. You can't have incredible price extremes on a pair and then the correlation stays static. It's not doable. But there's a balance to be had here, and I think this is challenging here in terms of that correlation reversion.
I'd much rather play just kind of like we don't like to say that prices are mean reverting, but we do trade a lot of price extremes.
Agreed.
And when you trade a price extreme, Pete, it's a matter of looking here in early March, and the stock market and the gold market was on a multi-year tear to new highs. And when you say, I'm getting short into this upside price extreme, you're more saying, I think that there's been a lot of zeal, a lot of people rushing to be a part of this stock market or gold market that's hitting new highs. And I think it might be a little bit overshot. And then you look for a reversal. I mean, usually not as big a reversal as this one in mid-March, but that's what you tend to look for. And I think you're seeing that independently in both of these markets.
Yep.
And I'm not, while, our stock's worth their weight in gold, I still don't think there's a story to be told about, if I look at stock prices relative to gold's price and I divide it by gold's price, then I'm going to come to some kind of, magical trade here. I don't think there's anything there, but I do think that there is opportunity in a potential for what we saw in the early part of 2020 here, which is, a little bit of this overzealousness in stocks and precious metals to get through those new highs, and everyone rushing to that market to get a piece of it. And I do think that there might be some opportunity in trading both of these markets independently. Now, that being said, you don't see the same upside extreme in the small stock 75 as the NASDAQ here. And of course, if you want to go to the biggest extreme.
Right. And you know what? We're seeing that between all the equity indexes. And that's where the opportunity comes in. There's always that question when a new product comes out. Well, what does it look like? What can I put against it in my world?
Sure.
And we quickly find that, if it's a SPY ES comparison, there's no tradable opportunity there. There's just a capital efficiency aspect to it. So we need products that live in the same world, but actually have varying degrees of performance. This is the interesting piece. Out of all these, if you said pick something to do here, I would be a seller of gold here. I would be a seller of NASDAQ and a buyer of SM75 on the extremes, and looking for a little bit of reversion. Out of the NASDAQ SM75 piece, they live in that same world. They're concentric circles of single names. Is that probably the better trade? Probably.
If it's not like there's this situation where you'd see stock market selling like you did in March, and SM75 just wouldn't go along with it. It's a matter of the same stocks, but a different view of a lot of those same stocks, and some new stocks thrown in for a little bit of a fresh vibe with that small stock 75. But yeah, Pete, also something to contend with is looking at this micro here in NASDAQ. This is, I think, a problem of the last few years that the CME tried to remedy with micros. But Pete, you're already here with the micro NASDAQ contract at a contract that's over $40,000 and is going to be a couple $1,000s to trade. With the small stock 75, you've got about a $4,000 product that's going to be a couple $100s to trade. And so accessibility factors in. Is it the biggest extreme? No, but it's a much more accessible market with a lot more back and forth here. I mean, if you've tried to trade any back and forth in NASDAQ or micro NASDAQ for the last 5 trading sessions, it's been an exercise in getting run over. So yeah, a couple things working in the favor of that smaller stock index. At the end of the day, are stocks worth their weight in gold? I don't see any kind of relationship there, any debate to be had, but both are pretty surely expensive.